We have helped hundreds of multifamily investors trade up into more units or getting into a better property. And I thought today's video would be great to show a simple 5-year model that our team has created to really look at if a property is of interest, to run it through the 5-year model. Let's take a look at what the projections are of a property, how the property is going to perform, and what the returns are to really see if it's going to improve your position financially. So let's dive in on this simple model. I went out and grabbed a property that I like that's on the open market. This is 6 units down in San Clemente, 1 block from the beach, that's been renovated over a 4 cap and could be a great exchange property for someone that maybe wants to trade out of Central North Orange County. Maybe there's some deferred maintenance. Maybe you're looking to just get out of some of the headaches with some of the upcoming renovations you might have to make. Maybe you got to replace turn some units, or you're dealing with low rents, or you got to fix a roof, and you can get into a property that's more or less renovated and it's got the rents already at the market, so there might be better cash flow. And also, to dive in on that, we have seen a trend of investors that are trading down. They're trading from a higher number unit count on their property and trading down into coastal properties, where they're trading from, say, a 14-unit property in Anaheim down to a 6-unit property in coastal Orange County. They're getting less units, there's less work to do, but they're improving their location, they're improving their rental rates, so they might increase their cash flow or maintain the cash flow they currently have with doing less work. So let's dive in on this 5-year model and take a look and see how this property is going to perform. So here's the 6-unit property located at 239 Avenida Palaio here in San Clemente. This is 6 units, renovated, and you can go through the brokerage package we received online and take a look at the information on the property. We can confirm the unit mix, the rental rates, and the square footage, which is attractive. All 2-bedroom units, over 1,000 square feet each, and the total monthly rent roll is $19,900 a month. And here is how close the property is to the ocean. It's just a block from the beach. Great little coastal property. And if you scroll down here, you can see this is what each interior looks like. The investor went in and renovated all 6 units. They look the exact same. So this is a great exchange property for an investor that doesn't want to do a lot of heavy lifting. Now let's dive in and take this information and put it into our model. So this is a simple model, again, that we created to do a quick little underwriting to see if this investment is going to make a lot of sense for us or not. So the asking price is $3.525. Let's plug in $3.5 million, and you can plug in here in the blue how much you want to put down. For this example, I put in 50%. The cap rate is a 4.25, and it's 14 times the income, which is pretty attractive for a coastal property. And we just simply put in the blue items here, the total annual rents of $238,000 per year and the laundry income. And we used a 35% expense load here. Everything else auto-populates. So then we can go down and plug in our debt terms. Today's rate, 6%, 5-year loan, 30-year AM with no interest only for this example, because I want to show the illustration of principal reduction. So this is the 5-year model. We can go in and grow the rents on average 3, 4, 5% per year or higher. For this example, we're going to use 5% because the rents are already at market. And then also the expenses, we're going to grow those at 3%, and we're going to grow the estimated property value at 5% per year. So you can see in this column, the first year, how the property performs, and then all the way over to year 5, we can see that the asset value is projected to be worth $4,254,000, which would be throwing off a 5% total return. The total return takes into consideration cash flow and also principal reduction. It's these 2 items here, which is $91,000. And then looking at a very important metric, this is what the equity would be after we sold. And if we go down here to equity multiple, this is throwing off a 1.66 equity multiple. That means our equity went up 1.66 times through the ownership of this property. Okay, so that was a lot to unpack within a quick little video, but this model's great. It doesn't go into too much detail. This is not ideal for going in and adding ADUs or modeling in a deep value add with a huge lift. This is great for an uplink property that you want to acquire, grow rents, just clip along every year and grow them at a certain rental rate, and really see how this equity is going to perform for you if you were to move it out of your down leg into an up leg. And a 1.6 equity multiple for a coastal apartment building here in Orange County could be a great little fit. So then part two is now, if you like this property, let's say for example, hey, look, Dan, this fits a lot of what I'm looking for. I'm looking to get in a coastal location. I'm looking for 2 bedrooms. I'm looking for an average square feet of 1,000 each. And I really like that I don't have to do a whole lot of heavy lifting on this property. Then we would go in and look at the equity you have in your current property and see how that's going to perform compared to this investment to really see how the numbers are going to shake up. We love the location. We love the coastal, but the numbers have to perform well. So a lot of times what we've seen with investors looking to do an exchange is their return on equity is very low. It's very, very low because they built up so much equity within their apartments and they want to take that and move that into another asset. So it's really a side-by-side analysis. So if you are in the market, maybe you're doing your first exchange, maybe you're thinking about it and you just want to go over your options, or maybe you're doing your 5th exchange and you're continuing to grow and improve your portfolio. If we can help in any ways, look at the current equity in your property and let you know how it's performing and also how it compares in another asset. This 5-year model is a great example. Feel free to reach out to me anytime. We can go through this illustration with you and we can put in any property that we have either off market or that's coming up for sale within our team and see if we can improve your portfolio and increase your equity. Thanks so much for watching, and we'll see you on the next video.